Eurokitchen's income statement. One of the most important documents that a company needs to supply for its stakeholders and creditors is the income statement. It provides a summary of the company's financial performance and includes information on sales, operating income, and net income. Income statements can be used to make comparisons with other companies and what is happening in the industry. The three main benefits of an income statement are: it allows you to make comparisons with other companies and what is happening in the industry. It provides information about how an organization generates revenue and spends money. It helps to make predictions about future performance. Students, today we discuss an income statement of Eurokitchen. Let's get started. Mr. William owns a mini restaurant Eurokitchen in Singapore. He is the sole owner of the restaurant. The restaurant is known for excellent and authentic European food. Eurokitchen also accepts orders online. All orders are delivered on time. Restaurant's customers include foreign tourists and also the employees of multinational companies. The accounting year ends on 31st of December every year. Mr. David, an accountant of Eurokitchen, has been collecting accounting information to compile year-end accounts for the Eurokitchen. Students, you are given the following information. Please note that these figures are only for classroom discussion purposes and may not reflect the real-life business. William pays the annual rent of $9,600. There are 5 employees who are paid a monthly salary of $800 each. The value of kitchen equipment is $20,000, and restaurant furniture is $12,000. There is a cash balance of $1,200 and cash at banks is $12,000. Kitchen inventory at the beginning of the year including groceries and other items valued at $10,300. During the year, total purchases of the restaurant were $30,000, which includes $8,000 credit purchases from Kitchen Smart, a supermarket. William also owns 2 delivery scooters. The year-end value is $1,200. All non-current assets are depreciated at the rate of 10% per annum using the straight line method. Year-end utility bills amounted to be $1,000 and repairs and maintenance are $500. The value of inventory was taken at the end of the year is $6,000. The annual sales of the restaurant were $80,000 including $10,000 credit sales. Students, you are required to prepare an income statement for the year ended December 31st, 2021. Also, calculate gross profit margin and net profit margin. Please check the description box below for more questions to discuss. So, give the video a thumbs up if you liked it, and hit the bell icon to get notified. Also, subscribe to this channel for the latest educational videos. Thanks for watching.